Yes.
Hey everyone, and welcome back to Your Money Life podcast, episode 254 of the podcast. We do this every week, so make sure we do this announcement every week. So wherever you're listening, make sure you like, subscribe, 5-star rate, and review the podcast before we get into it. Do that now. The same thing on YouTube. Let's jump right into it. We have a lot to talk about. It feels like it's been longer than a week that we've discussed some important items that need to really actually be discussed by us. The first and foremost, we're going to check out what's going on in the market because that's why a lot of people are here is understanding the moves of the market. First and foremost, we're seeing let's get the chart. Past 5 days, we've been about flat. We had a bit of a jump on the 11th, which would be yesterday's for the listeners as that are listening today. A little bit of jump, especially in tech shares yesterday, but we're about flat on the past 5 days. And today the market is slightly down, but not much. If you look at a month out, up over 1.25%. 6 months really been zooming, really a bullish environment again in the past 6 months that we've talked about would probably come back towards the end of the year into early next year, as well as potentially further. And year to date, again, 30% almost on the S&P 500. That's a very strong performance, not a typical performance. So people getting used to either wide swings, whether it's up or down, you're used to be supposed to see more normalized moves, but there's a different day and age that we live in today than in the past. But there was some news that came out in the last week. Consumer Price Index report came in line with economic estimates, which was, holding the line for people thinking that the Fed will do another rate cut at its next Fed policy meeting. We also saw the producer price index came. And there was a little bit of an increase, but roughly in line with what economists had projected. So Thursday, the PPI was a little bit stronger, but you also see again the consumer price index (CPI) was roughly in line, but maybe a little bit hotter than expected in some areas, especially core. So people are saying the Fed is going to have to do some rate cutting, which they said we're going to be hesitant to do, but we do see some areas that inflation is still persistent, where we will be able to take measures to cut rates. So that's one thing. Again, you're seeing earnings come out, small cap stocks or potential. This one analyst says small cap stocks have potential in 2025. Everyone's looking for areas in the market and pockets of the market now, right? But like the thing was, again, over the last year or two to build positions, you don't want to be chasing prices. You don't want to be chasing a stock. You don't want to be chasing a security because you now see it in the news. That's not the way you invest. You're supposed to build your position up over the long term. You're supposed to build your position up when things are down. You're supposed to build your position up when everyone is saying you're not supposed to be, right? That's what conviction is. That's what understanding, analysis, financial investing is. But a lot of people, again, it's really hard to execute because people really get stuck in other things mentally, especially when it comes to money. Let's look at the BTC watch. We'll be doing a watch now. Again, you were supposed to be building your positions. We never wavered. We never sold. We understood that you're supposed to be building these positions for the long term. So if you look at it in a month, BTC up 13%, 6 months 52%, year to date up 138%. So the beginning of the year. That's pretty strong performance, right? And so those people that have been building positions or holding their positions, not really caring much about what was being said in the doldrums of the bear market, as you see here 2 years ago, it bottomed what? Bottomed at 16,000 in late 2022, November of 2022, bottomed at 16,000. Now we've traced all the way up to over 100,000, right? And so that's another indication of understanding, not to just listen to headlines and then say, oh, it's this is that. Like that's just not the way you want to go about solid long-term investing. And we preached that from the beginning. Let's get into some current news. Elon Musk is the first person to pass 400 billion net worth, the first public person. There's private companies that we don't know what their actual net worth is because they're private. They don't have to release information. But I mean, for all intents and purposes, we know which the biggest companies in the world are, and they're mostly all public companies. And with that said, we do know how much shares Elon Musk holds in Tesla and all of his other public companies. because it's public, it has to be released. And so he is now the first person that we could verify is worth $400 billion. It's the milestone for the world's richest individual. Um, this follows an insider share sale reported to value his rocket satellite company. So again, he has multiple companies. His rocket satellite company is reported to be valued at 350 billion. There was an email that said that's a big jump from an expected valuation of 255 billion a month ago. It's not but nearly double the valuation a year ago. So this number for his private company, SpaceX, is literally on par with his public company, Tesla. So we don't know really how much he's worth. He could be already worth $1 trillion. If we don't know how much shares he owns in SpaceX, what his actual split is. He also has other companies that we obviously don't that are private that we don't know his shareholdings in. So he could be at $1 trillion, a trillion net worth. And so that's really, really incredible speed for him, I guess, on a personal note. Once you get to those numbers, of course, not much matters at that point. I think it's just crazy. It's crazy numbers. So we talked about inflation a little bit. Let's dive back into it and look at the numbers in more detail. First and foremost, the key gauge for inflation continued to edge higher in November. The U.S. Consumer Price Index rose on an annual rate of 2.7%. This was up from 2.6% in October. So again, that CPI, PPI, we've talked about that for years now because they've been leading the narrative, really, literally leading the narrative on the economy for a little bit of time now. When you strip out the volatile items such as food, you're seeing the index pretty much remains unchanged on an annual basis at 3.3%, while month over month, it was a little bit faster to 0.3. So we've seen inflation go from the 9.1% peak, which is incredible year over year peak, really high. It's one of the top three we've had in our history of tracking inflation or consumer price index. So now we've seen it drop to roughly 2.7% on a year over year basis. Again, that's just the rate of price increases. So the price increases are already baked in. You're not getting the drawdown that most consumers would like. You're just not raising prices as fast now, which again is good. But again, for a lot of people out there, it's not the best case scenario. So consumer experiences are different, right? So the good news is again, price behaving mostly what we expected last month. The bad news, economists expect that today's CPI report from the Bureau of Labor Statistics would indicate that inflation's progress was back to 2%. It's not back to 2% or lower, which is the target. So we're tracing a dangerous line there, but we'll keep watching. I think what we're going to see, you know, is inflation hover around this range, and the Fed's going to have to keep cutting until they get to a place where they're sufficiently confident that inflation won't really get hot again. So we'll keep our eye on it. NFL news. I love watching what private companies are worth because it gets you a sense of, just kind of their worth. Because it's again, the private companies, you don't know much about their worth and the inner workings of their financials. But the Philadelphia Eagles are now the most valuable team. They have a record $8.3 billion valuation following the sale of a minority stake. So again, you get a little glimpse into these private companies if information leaks about the valuation when someone passes shares or shares change hand in these private transactions. The Wall Street Journal cited a report from an anonymous source, again, it was leaked, that the sale underscores the rising value of NFL franchises fueled by the league's most recent move to allow private equity investment. So it looks like a private equity investor bought a stake in the NFL or in this Eagles. League owners also approved on Wednesday the sale of a 10% stake of the Miami Dolphins to a capital management firm and a 10% stake of the Buffalo Bills to another capital management firm. And Nike and NFL extended their partnership for 10 years. So again, an anonymous source leaked the valuation, the private valuation, or what they came to, gave the Eagles an 8.3 valuation based on whatever stake was sold and the purchase value. So if you're selling 10% of something, you can obviously deduce based on how much you paid for that 10%, what the full pie is worth. And so that's how you're getting this valuation number here. And interestingly enough, I'm as curious. So, if you think about the NFL, you usually think the Cowboys are the most valuable team. But because of this actual certified, usually they put out Forbes lists of valuation of sports franchises, but it's not concrete because it's just their guesstimate based on some, their formulas they put together. It's their guesstimate of what the valuation is, but they don't have concrete numbers. When you have a sale, you have a concrete valuation of what someone else was willing to pay for said shares, which gives you a concrete valuation. And we have one for the Eagles, and it's 8.3 billion. So I mean, imagine if Jerry Jones sold a portion of the Cowboys. I would assume it hit over 10 billion. I mean, I'm pretty confident in saying that. And so that's pretty impressive. Yeah, really impressive. More news. Google's prototyped a new AI agent. Google's unveiled Gemini 2.0. It's an artificial intelligence technology that, according to the CEO, can think multiple steps ahead and take action on your behalf with your supervision. Many of the new features are available through Google's AI agent prototype, which can chat like a person and make sense of the physical world as a virtual butler. Interesting. So again, we've talked about AI tools and how you're using them. I'm really using them in ways that are beneficial for me, make me more efficient. I think everyone's finding the tools that they can use to make themselves more efficient, and you should be, because it's something that's going to be more and more incorporated into your life and should make your life more easier and more efficient going forward. So find the ones that work for you. I get this is great news. It seems like a great product. I haven't fully tested out 2.0 yet, but plan to. For the YouTube viewers, we are watching the video to share. Today, we're sharing the progress on a series. Excited to share. Okay, let's see what they're saying here. Take action. Embedded into the phone. I mean, the capabilities of these AI models are incredibly impressive. And I think we're scratching the surface because, of course, we know part of it is learning from you, the inputter, learning from its surroundings, learning from public data to become better at creating tasks. And so it just really just continues to compound at the rate at which it gets smarter is increases, right? With more information it's fed, with more prompts it's fed. It's really crucial. We talked about this a while ago, but Albertson is now suing Kroger because they tried to, if I'm not mistaken, to buy Kroger, merge with them. The merger got broken, and now Albertson is suing. So a federal judge blocked the $25 billion merger between two of America's most largest grocery chains. Albertson wanted Kroger to be purchased by themselves. Albertson yesterday officially backed out the deal and sued Kroger for billions, accusing its larger peer of not doing enough to appease regulators. So they're saying, Kroger is actually saying, you didn't do enough to make sure that this deal was going to fly. Wasted our time paying lawyer fees and all this different stuff, paying all of our inside corporate people, getting investment bankers that we paid, even though the deal didn't go through. They have some little breakup fee, I'm sure. And now they're suing Kroger, saying that you didn't do your job. So this is again, the grocers spent 1 billion combined on the deal over the past 2 years to lock down the merger out. So there's so many fees associated, mostly going to lawyers, pretty much, to do things to make sure this deal goes through. Didn't go through, so now they're suing them. So we'll see what it is. The decision to block the Kroger Albertson merger was part of the Biden administration's FTC decision, and now there's going to be all fallout from said decision. So we'll watch that very closely. Crypto debates Google's quantum breakthrough as Bitcoin investors urge calm. I know this is really nuanced. I want to read more of it before I get into it, but I encourage people to read more about this. It doesn't seem to be a threat to Bitcoin. They were pretty much saying that there was a quantum chip that could solve Bitcoin's computation in under 5 minutes or could solve it at some point. But most people showed the holes in that argument, saying that it didn't have enough computing power to pretty much do what people thought it could do. So it was not feasible on that end. More news, GameStop. Remember GameStop? The people that thought it was a revolution, that thought it was going to take over the world. They reported another quarter of slumping sales. They said that their quarterly sales fell 20% from a year ago, coming in at only 860 million. That's the worst sales drop than the 9% it had for quarter three. They did swing a profit. They must have cut some major expenses. But again, struggling company, just shades of a time past that we remember, shades of a time much past. So that's the biggest news so far. I mean, a lot's going on in the last week. It seems like it's been a long time since we've done our chat. We've gotten together. We will run into a question of the day which is a pretty simple one. What type of online purchases return the most? I mean, it's got to be clothing, right? It's got to be clothing. And then after that, I would see some electronics, I would assume, but let's work into it. Clothing, bags and accessories, shoes, food and beverage, except food and beverages, accessories again, consumer electronics, 11%. Um, yeah, that was pretty easy. When I asked about the reason why, respondents said clothing. Interesting. Okay. So clothing's the most return. Let's go to another question. How much do people, this is timely, how much do people spend out of pocket on prescriptions in the last year beyond their insurance premium? So out of pocket on prescriptions in the last year beyond their insurance premiums. I think it's going to be a decently high number, what, 1 to 2,000, I would say. Um, Answer 51. Okay, so that's the aggregate 51 billion. So on average, $14 per person. So, okay, it's a lot lower than I expected. There's a high cost of concerns. Policymakers and pharmaceutical manufacturers are making efforts to improve medication access and affordability, but costs continue to be a significant burden for many. There's a lot going on that I'm sure people are reading into or keeping up with. So that's a timely question to understand, and it's a very nuanced industry that I don't understand that well myself. So that's the Your Money Life podcast. Of course, make sure you like, share, subscribe, and keep tapped in. We have a lot of things going on with New Street Advisors Group One seminars going on in the near future. We welcome them many new people to New Street Advisors Group that we're going to be working with and helping with a lot of their goals financially. So make sure you tap in with us or send us to someone so they can tap in with us. New Street Sports is really moving and rocking and rolling. So we have a lot to do and a lot to work on. So again, tap in, stay connected. We will see you next